Hello folks, welcome to this week's edition of the Satori Traders Precious Metals News. Gold in the monthly time frame has shaped up quite a bit since the last time we looked at this chart. Price was actually dropping below this right shoulder, and I was talking about how we didn't want to redraw this pattern prematurely. Didn't want to jump to conclusions until we saw what price had actually done. And here we are on Sunday morning, and that sure looks to me like price has closed back above the boundary of that shoulder, the right shoulder of that overall pattern, and then I just arbitrarily drew that shoulder, but it's encouraging to me to see where price closed in regards to that pattern. And so anyway, there's gold in the monthly time frame. We are still working on this long term. This is 9 years, so this is a non-trivial pattern. It's been building over a period of 9 years, 9+ years. If we go to, this is Edwards and McGee. If you talk to technical analysts, they will tell you that this is their Bible. Edwards and McGee is the Bible of technical analysis. And using their methodology, we could arrive at a price target based on this head and shoulders chart pattern of 26.85. Based on some shorter term considerations, this is my 23.57. That's my current price target for 2021, early 2022. And in my opinion, we are still on track for that target. And again, notice where price closed last week. So that's gold in the monthly. Gold here in the weekly, basically the same story. We got a big price manipulative. We had a large price manipulation in recent week that took price all the way down to the 1680 level, which has been support on several occasions going back multiple years, and then there it is as resistance. So resistance, support. And so all they accomplished last week with their manipulation was to test the 1680 level as a strong support. Clearly buyers came in at that level and they bought the shit out of gold last week. So very little accomplished with last week's manipulation of the precious metals market. This is a super bullish candlestick. That long lower wick is very bullish. Anyway, that is a very bullish candlestick in the weekly time frame for gold. If we drop down into the daily time frame, we can see. The last time we looked at this chart, we talked about this big manipulation. That was Friday based on a hawkish statement from one of the Fed heads, followed up by a hot jobs report, and then this was Sunday open, so thinnest trading market of the week, and then exacerbated by two of the major markets exchanges that are normally open Sunday night in Asia. They were closed Sunday night because it was an Asian holiday, and so that's Sunday where the manipulators were able to create that big price bar. That was Sunday night in some of the thinnest possible trading that you can imagine. And clearly nobody with a profit motive does that in the middle of Sunday night. That is purely a non-profit motivated trade. And we can see what gold has done in response or in recovery to this manipulation. We've got several very strong indications. Doji candlesticks are always an indication of elevated energy. And so we can see here we got, two dojis. Each of these candles are bullish. And then in particular, Friday's candle, notice, let's look. So the high on Friday was 1780. And we closed at 1770, so about $1. So price closed about $1 off the high of the day. That's a bullish indication. Energy is very elevated. And of course, we can look at the stochastics indicator. That's my proxy for energy, a measurement of energy in a market. And we can see that, based on stochastics, we're currently mid-range, but energy is right. So anyway, that's gold in the daily time frame. when I spoke with you on Wednesday, I said that I would revisit my premise on the mining stocks. And because I was, based on the action in the physical metals, I was getting concerned about my premise for the mining stocks and were they really in an uptrend. And so we're moving into, next thing we're going to look at is the mining stocks. But my perspective, my opinion of what's going on in the precious metals markets has shifted quite a bit since Wednesday. I believe at this point it is obvious, anybody that wants to spend 30 minutes doing just surface level research, it'll be clear to them that that was a manipulative move in gold last week, and that now we're seeing the response. This is the underlying trend. The underlying trend in the precious metals is to the upside, certainly in the weekly and monthly time frames. And so anyway, this was a manipulation counter trend. They were attempting to break the uptrend in the precious metal, and it is my opinion that they failed. And so not only did they fail, but now they're getting slapped in the face with the result. I mean, every time they attempt a manipulation and it fails, they just appear weak. It's the paper tiger. And so anyway, enough of me rambling. Let's go look at the mining stocks. So this is the UE. UE bugs used to be referred to as the gold bugs index. In the precious metals bull market that ran, the early 2000s through late 2011, the UE, that was the index that most precious metals followers, that was the index that they paid attention to. So I don't always look at the UE, but today, because I wanted to take a closer look at the mining stocks, I went and looked at the UE. I start with a clean chart because I don't want to influence my thinking based on previous lines. So I start with clean chart. First thing I noticed this morning was this channel. So to my eye, we have this upward channel that started down, that's 2013, 2014, there's late, late 16 when we get into there. So anyway, that was the first thing that caught my eye in this chart. Looking at moving averages, just out of curiosity, I don't typically look at moving averages on the monthly chart. Just to see this morning, I threw the 50 period moving average on here, and what I notice is that when price, as a generality, when price is above this 50 period moving average, it's in an uptrend, and see, that was true throughout that bull market, early 10 plus year bull market. That was the case. We have to acknowledge that this spike to the downside, that was the 2008 financial crisis. This period where the UE was below the 50 period moving average, that was the bear market. So the bull peaked in late 2011, early 2012, depending on what market you want to look at, and then was in the bear market for the next 4 years. And so, there's the bear market, prices below the 50 period moving average that whole time. We got a sharp rally in 2016, and that's what we see right there. In my opinion, that was the demarcation point between the bear market and a new bull market. So, right there, that's where this bear market ended in, late 15, early 16. That was the end of the bear market, and we are now in a new bull market, and notice that price in the UE is in an uptrend, higher high, higher low, higher high, higher. And again, we've got that spike there, that was the big scary plunge. All markets did that spike to the bottom. Now we have to acknowledge, in this chart, that if this is a legitimate channel that I noticed this morning, we're not at the bottom. We're not at the bottom of that channel, so potentially, if the mining stocks wanted to go lower, they certainly could from this point. Energy's in the tank and falling. MACD now on a sell signal, but in bull mode. So both indicator lines are above zero, suggesting that the primary trend in this time frame is upwards, which, that's my premise as well, is that mining stocks are in an uptrend. Let's drop down to the weekly time frame in the UE. Oh, this is in the monthly chart. I noticed this horizontal support resistance. Let's take a quick look. That's that pink line. So clearly there's something going on. We had price pushing into that level as resistance. We got the big scary plunge. On the recovery from the plunge, price pushed right through that resistance like it didn't exist. But notice there that we got the pullback, the test of that level as support. And in general, when I'm drawing support and resistance levels, this is the kind of action that I'm looking for. I want to see the support resistance level. I want to see it tested as resistance, and then I want to see it tested as support. And so that's exactly what we've got going on here. And then notice when price does a pullback, where does it stop? Well, it stops on that previous support resistance level, and here we are again. We're at that level. Now notice, I'm geeking out on technical analysis, folks. Sorry if that's not what you're interested in. I apologize. Here's the same concept in a slanted line. So notice in this downtrend, price, for whatever reason, stopped at this level and bounced. Stopped at this level and bounced. Well, the next time it fell through, but now notice, now price is retesting that level. It was support over here. Well, now price is retesting that level as resistance. Test, fail. Test, little bit of an overthrow. So I would characterize that as an overthrow, and then it ultimately failed, And so anyway, it's the same concept of looking for levels that demonstrate support and resistance, or at this level, resistance and support. Same concept, two different directions. So here we are. This is mining stocks in the weekly time frame based on the UE index, and we can see here that it is currently bouncing potentially off of that level as support. Yeah, most of the indications on this chart are not bullish. Energy's in the tank. MACD's in bear mode on a sell signal. Moving averages, that's 10-week and 40-week moving averages, they're in bearish alignment. So there are a lot of bearish indications about this chart. Now if we focus in on the MACD indicator, in the big picture, MACD is not a bounded indicator, but it tends to act as though it was bounded. We tend to get ranges in MACD as though it were bounded. And so sometimes we can look at, okay, what is a level of oversold? So this would be oversold in MACD down here, and then overbought would be up here. And so we can look overbought in particular, well, I guess you got to look at the two together. So notice that when MACD gets up here to the overbought level, overbought, these are price peaks. So when MACD is getting up to the overbought level, not uncommon that price pulls back, needs some kind of rest or correction from having become so overbought. Look at that. Look at that. Same concept on the downside. So oversold, oversold, and then we get a price rally. Oversold, and we get a price rally. We're coming back down to the oversold level, but we still have some room to go. So this is MACD is another indication that if the mining stocks want to move lower, they certainly could do so from here. Let's look at the UE in the daily. I don't know that there's really much more we can add there. So let's continue. This is GDXJ. This is the monthly time frame. GDXJ this is my standard proxy for the mining stocks. There's a couple of bullish things here, a couple of bearish things. In this channel, if this is a valid price channel for GDXJ, notice that we reached the level of overboughtness, and we're currently pulling back from that level, and then oversold is way down here. And so from that perspective, mining stocks got a long way to fall. If they need to get back all the way to here to find support, they got a long way to fall. I suspect that that's not the case. If we look at volume, so we can use volume as a secondary validator for price action. So in this case, here we see the sharp upward movement in price, and notice that volume is right during that period of time. And so that is exactly what we want to see when prices rising in an uptrend. We want to see volume rising along with it. That's bullish. In an uptrend, when price pulls back or goes into a sideways correction, consolidation, we'd like to see volume pull back or at least just bounce sideways. We don't want to see volume rising as price pulls back in an uptrend. And so in this monthly time frame for GDXJ, this is bullish volume action, which supports the idea that price is in an uptrend, and this is just a pullback in that energy is low and dropping, MACD in bull mode. So MACD is another indication that price is in primary trend in this time frame is up. Let's drop down to, this is GDXJ in the weekly time frame. Now see, when we looked at this chart, I believe it was Wednesday morning, this particular candlestick, last week's candlestick, price was still down here, so most of that candle was red at the point we looked at this chart. Now, in hindsight, that candle does not look bearish. Doji candles are always indicative of elevated energy, and that doji is bullish. Anytime you get a longer, lower tail, lower whisker relative to the upper whisker, that's bullish. That doji is bullish. And so the difference between Wednesday and today is that candle has now become bullish. On Wednesday, I was concerned that the GDXJ was invalidating my premise, that my theory that mining stocks are in an uptrend. Today, looking at this chart, I'm right back to the mining stocks are in an uptrend. Last week's activity was a manipulation, a very, very strong manipulation. We haven't had that level of manipulation in some period of time. It's been quite a while, actually. And in part because the metals aren't responding. One of the things I'm noticing in the current secular bull market in the precious metals, these manipulations are not having the lasting effect. Back in the 2000 to 2012 bull market, the kind of manipulation that we experienced on Friday and Sunday, the markets would have taken weeks, if not months, to recover from. And you can see, based on last week's action, it was a week. So the manipulators were able to knock price down to 1680, so all the way down to 1680. Well, we're right back at 1780, so $100 bounce off of that manipulative bottom. My point is, their manipulations are not having the effect that they used to have. The primary trend, the underlying trend, is overcoming their ability to manipulate the market. And one of the things that Richard Russell always emphasized is that the whales, the people with they got multi-billion dollars of trading capital, and in particular with leverage, 20 times leverage in the futures market. So, imagine you come into the market, you got $1 billion worth of trading capital, and now you get to play with 20 times leverage. You can move the market, literally move the market for a short period of time. And that was the point that Richard Russell always made. The manipulators can push the markets around in the short period. They are not capable of changing the underlying trend. The underlying trend in the precious metals markets, folks, is upwards. Anyway, so I've shifted from, on Wednesday, I was concerned about the mining stocks not being in an uptrend anymore. I'm back to, as of Sunday, August 15th of 2021, the mining stocks are in an uptrend. GDXJ in the daily time frame, sideways consolidation in a support resistance level, energy's in the tank, MACD's in bear mode. Potentially, we're, heading into, a couple of days into a new buy signal, potentially in MACD. They're still in the daily time frame, same kind of story, sideways consolidation after a bounce on that support level, maybe a new buy signal coming in MACD, energy in the tank, potentially rising. One of my thoughts about the mining stock right now, the mining industry is profitable at current metal prices. We don't need higher prices for the mining stocks to be profitable. They're actually quite profitable, and one of the few sectors of the market that actually have legitimate profits. We're not talking about gap adjusted bullshit. We're talking about throwing off real live cash every month. The mining sector is one of the few sectors where that is happening. Investors aren't aware of that yet. So, I think most investors taking a casual glance at the precious metals sector assume that we need rising metals prices for the miners to be profitable, and that is not the case at all. Adam Hamilton does an excellent job of analyzing the mining sector at a fundamental level. If you're interested in digging into the details of the sector, go look at Adam Hamilton's work. He publishes a lot of information for free. This particular article is published on 321gold.com. I've pointed you at that site as a resource before. That's Bob Moriarty. Excellent work from Bob. Excellent work from Adam. Go look at both of these guys' stuff. Now Adam, he gives away a lot of information. I tell you folks, there is a lot of information right there in that one. Now you got to go read Adam's supporting text and spend some time thinking through it. But trust me, there is a lot of valuable information in that one table. Yeah, Adam crams a lot of information into the charts, the graphics that he shares with us. He puts a lot of information, a lot of time and energy into his work. Highly recommend Adam's stuff. I'm going long again, folks. Let me keep rolling. Let's leave the precious metals. This is the U.S. dollar in the weekly time frame, still pushing into this 93 level as resistance. But this is a bullish chart. This is in the weekly time frame. The trend is to the upside, and no indication that that's not going to continue. So the dollar in the daily time frame, we got a sharp pullback. Moving averages are in bullish alignment. Energy is elevated. MACD's in bull mode. This is a bullish chart. The trend is up in the dollar. Of course, a rising dollar is a headwind for the precious metal sector. Let's see, this is the interest rates, a yield on the 10-year note in the weekly time frame. My premise here is that the primary trend is upwards. Interest rates are rising. This was a Fibonacci pullback to an obvious support level, and price is now bouncing, rising off that level. Energy rising. MACD histogram hinting that the MACD is about to head back up. MACD is still in bull mode. Arguably, looks like that one indicator has dropped down. It's down below zero. MACD is mostly in bull mode. How about if we put it that way? Let's see, interest rates. This is the daily time frame. So I noticed when I was looking at this, this double the range. So one of the things that Timothy Morge, Dr. Timothy Morge, rest in peace, Dr. Morge, thank you. One of the things that he taught in his advanced courses was the concept of double the range. And so in his work, he noticed that when price channel, whether it's a slanted channel, as we see here, this is the note in a downward sloping channel, same concept in a sideways channel. So right here, if we look at that horizontal level, there's a sideways range. So in either case, the concept that Dr. Morge noticed was he called it double the range. And so this blue line here, that's the distance, the range of that channel. And so if we clone that line, paste it up here, well, now we have doubled the range. That's the idea, is that this range, that range is the same, and that when price breaks above the first range, it is likely to double the previous range. And so in this case, we didn't quite get to a double there, but it's pretty darn close. And notice that the note ran into resistance there. That's the lower median line that's a modified shift pitchfork there, where price or the note ran out of energy, currently getting a pullback from that level. MACD rising, energy elevated. Bitcoin, I've forgotten to look at Bitcoin in the last two videos, I think, and I apologize for that. Basically Bitcoin has been, bumping along sideways below that resistance level. I had meant to share this idea, back when that was the last bar on the chart. I was going to point out that, basically speculators, traders had two options, that you could trade that as a breakout trade. If price broke above that resistance level, I'll enter a trade, and that would be that blue line. Or as a more conservative trader or speculator, I'll wait for the pullback to support, and then I'll take my entry there and hope or assume that based on probability, price is going to head higher from that level. And so now we're, 2 days later from that idea. And so, price has continued to bump along sideways, basically. Energy is elevated. MACD is in bull mode. Certainly this is a bullish chart suggesting higher prices. We haven't made it back to our support level there, so if you are waiting for that as an entry, or we haven't gotten it, that's the kind of entry rules like that, in my opinion, you really need to have fixed in your mind ahead of time, so you don't find yourself sitting here waffling, saying it's like, oh, it's almost there. I'll go ahead and I'll take an entry at this point, even though Bitcoin hasn't quite met my entry criteria. And of course, if you keep accurate track of your trading results, you might find that those trades where you shortcutted your rules, those are your losing trades or your less than profitable trades. So anyway, the path of a trader is it's an interesting evolution. Equity markets were bullish last. This chart is cluttered, so this is an Andrews pitchfork. And so I am going to get rid of it so we can get some clarity here. So we can see, I would say that this is the currently active pitchfork in this SPX in the daily time frame. This is a modified shift pitchfork. And we can see that, price found it at resistance at the upper median line, resistance. And so that's what I would maintain. We are currently dealing with resistance at the upper median line of this mod shift fork. 4,500 is an obvious target overhead. Energy obviously is very elevated. MACD has gone flat in bull mode. So hard to read anything into a flat MACD. That's a bullish chart. No reason to think that SPX isn't going to head higher from here, albeit it's got to deal with that resistance level. In the Dow, it's the same thing. This is Andrews pitchfork, got price dealing with resistance at that median line of that Andrews pitchfork. It's not, the fork is not causing that resistance, obviously. If you think about it, it's clearly drawn a line on a chart. That doesn't affect price action. It's just that the Andrews pitchfork is identifying this support resistance level for us. The Andrews pitchfork is showing us where price is likely to run out of energy. And that's exactly what's going on right there, is that price is reaching that median line, it's running out of energy, and then it's pulling back. Nasdaq, daily time frame. So same concept here. It's instead of the Andrews pitchfork identifying a resistance level, it's identifying a support level. And so we can see that clearly here in the Nasdaq, prices finding support on the median line of this, I think it's an Andrews pitchfork. And so anyway, I would expect just a continuation of this. We're bumping, it's, sideways, but generally upwards in the Nasdaq. So again, equity's looking bullish at this point. Brent starting to pull, we got this big pull test of that potentially support level. Looks like a double bottom at this point. Now we're getting this bounce, running into resistance, median line, that's a shift, pitchfork. 20-day moving average not far overhead. Energy is low but rising. MACD in bear mode. So nothing exciting going on there. Folks, I've run long this morning. Hopefully I've provided some value for you. I'm going to shut it off and I will see you